What's up, guys? Welcome back to my YouTube channel. This is Mr. TC from Stateful Traders. So in today's video, I'm gonna be showing you the tips and tricks on how to trade booming crash using 5 minutes time frame, sniper entries, scalping strategy. Okay, so if you look at your charts like this, you see nothing but only confusing moving candlesticks. You see, so for you to be able to identify setups, you have to start by highlighting the key levels on the bigger time frame. So we're going to use 1 hour time frame. Okay, so on our 1 hour time frame, you use the horizontal line to highlight the key levels. Okay, remember when you're highlighting the key levels, you connect in any way the market was respecting most of the time. So right now you can see that I've connected in area where the market was respecting most of the time. So why I'm doing this is because you have to buy its support and then sell at resistance. So these red lines will help you to identify the support and resistance when you switch back to your 5 minutes time frame. Okay, when you switch back to your 5 minutes time frame, because the market will keep on respecting these levels like what has been happening in the past. You see, the market was respecting all these levels, so it will keep on doing the same in the future. Okay, so that's the reason why we first identify the key levels, and then after identifying the key levels, you switch back to 5 minutes time frame. You can see that's why the market started selling right here. We can see why the market started selling right here, because it's an area of resistance. We can see why the market started buying here is because it's an area of support. Okay, it's an area of support. You see, it's an area of support. So each and every time when the market approaches key levels, you look for an opportunity. So now the question is, how do you identify setups? First thing is, you must look for reversal and continuation patterns at the support and resistance zone. So when the reversal patterns appears on a resistance zone, it's a signal that the market is now changing from bullish to bearish. Okay, and then when the reversal patterns appears on a support zone, is a signal that the market is now changing from bearish to bullish. Okay, so you look for the reversal patterns, which are the head and shoulder, double bottom, then double top. That's what you look for each and every time when the market reached a resistance zone. So in this case, you can see that the market reached here, and then it created a double top, and then after the double top, it started selling. So for you to be able to find proper entries, we have to draw your trend line. Okay, we have to draw your trend line for you to be able to identify proper entries. This was a breakout and a retest. This was a breakout and a retest. As I have said, when you are drawing a trend line, it must first touches two peaks, and then on the third, that's where you expect the market to make a breakout, to bounce, or to make a breakout and a retest. So you can see on this setup that the market made a breakout here, and then it came for a retest, and then it started selling. So this is what you look for when the market reached a support and resistance zone. This is a support zone. This is a support zone. So let us see how the price reacted to the zone. Okay, so first thing, as I have said, is to identify a reversal and continuation patterns, and you can see on this setup that the market made a triangle. The market formed a triangle. So this is a continuation pattern, the bullish triangle. So check what happened after the formation of the triangle. The market started going up. Okay, the market started going up. The market started going up. Let us look for another. You see what happened here? You see what happened here? This is the support. You see why I am saying this is the support? The market made a resistance here, and then the price got rejected, and then it started selling, and then it went up. Okay, and then it came for the retest of the resistance, forming a support. So this is a support which is here. This is a support. So a support will look from reversal pattern or a continuation patterns. So let us see the pattern from there. You can see that this is a flag. Okay, this is a bullish flag. So check what happened after the formation of the bullish flag. It started going up. So on entries, when you are trading using this 5 minutes time frame, on entries you end as soon as the market made a breakout, and then you put your entry right here. You can see what happened after the breakout. Boom, it started going up, Let us see another example here. This is where you put your entries slightly above the broken trend line. Okay, slightly above the broken trend line. So right now the issue is now on where exactly to set your stop loss. Stop loss is put at the previous support. Let's say you are buying, and then when you are selling, a stop loss is put on the previous resistance. So in this case, our stop loss is right here. Okay, our stop loss is right here because this is the previous support. So which means you were risking just this small space to make all these pips. Okay, this is how you trade boom and crash 5 minutes time frame. You can even see what is happening here. This is the current setup. This is the current setup. You can see that the market formed the double bottom here. What happened is the first leg is slightly above the second leg. So as I've said, on the support, that's where we look for buying opportunities. And you can see this is the support zone. Your entry was here. This is where your entry was, and then stop loss on the previous support. Then take profit. Obvious take profit is here. See what happened here after this triangle. This is a bullish triangle. This is a bullish triangle. You see, the market started going up. Check the risk to reward ratio. Obviously, this is our stop loss, and then the entry right here. And then for take profit, we use this first resistance peak, and then for second take profit. You see, it's very easy, very easy. You don't have to confuse yourself using many indicators. Of course, you can use one or two indicators as confluence, but if you are pure price action trader, there is no any need of putting any indicator, because what happens is indicator follows the candlestick. So if you already know how to trade using price action, it's not necessary for you to put any indicator. It's not necessary for you to put any indicator. So this is another setup for catching spikes. Okay, so when you are drawing your trend line, first two peaks, this one had 3 peaks, and on the fourth, that's where we are anticipating the price or the market to make a breakout or a breakout with a retest and then start selling. So this is a resistance zone. Okay, this is a resistance zone, and first I said the formation of the reversal pattern. This is a head and shoulder. This is a head and shoulder, and then the breakout made here and reaches, you see, started going down. Boom, started going down. So stop loss is here, and then entry is here, and then for take profit we use this support. Okay, we use this support. So this is how you trade boom and crash. This is how you trade boom and crash, catching spikes and also trading ticks. The strategy works both catching spikes and trading ticks.